You know that line on your pay stub, the one that says labor insurance? We all see it, but what is it really? Well, it's not just another deduction. Think of it more like a secret superpower you've been charging up with every paycheck, just waiting for the moment you need it most.
So let me ask you a question, and be honest. If something happened tomorrow, would you have any idea what to do or what you're owed? If you're like most people, probably not. And the last thing you want is to be scrambling for answers when you're already stressed. Our goal here is to fix that, to turn that uncertainty into confidence.
The easiest way to wrap your head around this whole system is to picture it as a giant safety net. It's not just there to catch you if you fall, it's also there to give you a boost during some of life's biggest moments. So to see how it all plays out, we're going to follow a worker. We'll call them Alex, and see this safety net in action throughout their career.
All right, so where does this story usually begin? Well, for Alex and for most of us, it kicks in with the most common reason you'd ever need insurance in the first place: getting sick or getting hurt. This is your absolute first line of defense.
Okay, and this is where the details are everything. The system makes a massive distinction between, say, catching a nasty cold and getting an injury that happened because of your job. And trust me, how your situation is classified completely changes the kind of support you're going to get.
The magic phrase here is occupational hazard. Now, this doesn't just mean a sudden dramatic accident, like a fall on a construction site. It can also be an illness that slowly develops over years, all because of the conditions you work in. The law gets that some jobs are just riskier, and it builds in a much higher level of protection for them.
And here's where it really hits home. Look at the numbers. If Alex gets the flu, they get 50% of their pay starting on day 4. But if Alex gets hurt on the job, that jumps to 70% for the whole first year. And get this, for a work injury, labor insurance can even help cover the medical co-payments that your regular health insurance won't. The takeaway is simple: proving it's work-related is a total game changer for your benefits.
And you would be amazed at what actually counts as an occupational hazard. I mean, the official list is huge. We're talking everything from chemical poisoning in a factory to gradual hearing loss from working with loud equipment for years. It even covers really specific things, like a disease that affects your circulation from using vibrating tools all day. It's way more than just slipping and falling. Okay, but this safety net isn't all doom and gloom. It's not just for when things go wrong. It's also there to support Alex during some of the best and biggest moments of their life.
So let's say Alex decides it's time to start a family. As long as they've paid into the system for about 9 months, they're in for a pretty great benefit. We're talking a one-time cash payment equal to 2 full months of their average salary. And here's a really cool part that a lot of people miss. It's not just for moms. A new dad can claim this benefit too if his spouse doesn't have insurance. How great is that?
Okay, let's fast forward. Decades have passed. Alex has had a great career, and it's finally time to hang it up and retire. After all those years of paying in, they now face one of the biggest financial choices of their life. So what's it going to be?
So, Alex basically has 2 roads to choose from. Path 1 is the monthly pension. If you have at least 15 years of coverage, you can get a steady, reliable payment for the rest of your life. It's all about long-term security. Path 2, which is mainly an option for people who started working before 2009, is a one-time lump sum payout. One big check. Now that's great if you want to pay off your house or start a business, but then it's on you to manage that money. There's no right or wrong answer. It really depends on what your goals are.
All right, we have to touch on something that's tough to think about, but it is so important to know. That safety net we've been talking about, it doesn't disappear when you're gone. It's designed to extend and protect your family too.
The support here comes in a couple of ways. First, there's a grant to help with the immediate funeral costs. But the biggest piece of this is the survivor's pension. If the worker passes away, their family, we're talking their spouse, their kids, or even their parents, can receive a monthly payment. This is absolutely critical for making sure that a personal tragedy doesn't instantly turn into a financial catastrophe.
So the safety net is there for a temporary illness, and it's there in the worst-case scenario. But what about something in between? What if an injury or an illness permanently changes your ability to work? Well, this is where the system provides some of its most important long-term support.
So let's be clear on what the law means by permanent disability. This isn't just being out of work for a little while. This is when doctors confirm that even after all possible treatments, you have a condition that is fixed, it's not going to get better, and it directly impacts your ability to earn a living.
And just like with retirement, there are basically 2 types of benefits here. For the most severe cases, what's officially called a lifelong inability to work, you can get a monthly disability pension. It even provides extra cash if you're supporting a spouse or kids. For disabilities that are permanent but not quite as severe, you'll get a one-time lump sum payment. And remember the occupational hazard rule? If your disability was caused by your job, that one-time payment gets a massive 50% boost. That is huge.
Okay, so we've seen what the benefits are, but how are they actually calculated? What are the rules of the game you absolutely need to know? Let's pop the hood and look at the mechanics.
All right, if you remember one thing from this whole explainer, make it this: the average monthly insured salary. Just about every single benefit we've talked about is based on this one number, and it's calculated by taking the average of your 60 highest paid months, your best 5 years. This is why it's so critical that your employer is reporting your real salary. Every dollar they underreport literally weakens your entire safety net.
Now, here's a deadline you cannot forget. The law gives you a 5-year window to file for a benefit, starting from the day you become eligible. So if Alex has a baby, the clock starts ticking. They've got 5 years from the date of birth to claim that money. If you wait longer, your right to that benefit just vanishes. It's gone forever. So seriously, don't wait.
So this all sounds pretty good, right? But the whole system relies on employers doing the right thing. So what if they don't? What happens when a company tries to break the rules? This is where your knowledge truly becomes power.
First off, who's actually footing the bill here? Well, you might be surprised. As the employee, you only cover about 20% of the cost. The government chips in 10%. Your employer, they're on the hook for the other 70%. The vast majority of the responsibility falls right on them.
Which, of course, leads to the big what if. What if your boss is a little shady and decides to forget to enroll you? Or maybe they report you're earning less than you really are, just to save themselves a few bucks. Well, let's just say the law does not take kindly to that.
The penalty for an employer who fails to enroll an employee isn't a small fine. It's 4 times. They get hit with a penalty worth 4 times the total premium they were trying to avoid paying. It's not a slap on the wrist. It's a serious financial punishment designed to make sure everyone complies.
But here's the best part. And this is all about you. That big penalty, that goes to the government. But what about your money? The benefits you lost? The law is crystal clear. Your employer has to pay you out of their own pocket for every single cent you lost because of their mistake. They are legally required to make you whole. Period. So there it is. That's the superpower that's been hiding on your paycheck all along. It's a safety net for sickness, a celebration for new family members, and security for your retirement. The entire system is built to protect you. And knowing exactly how it works is the first, most important step in making sure it does. So you know your rights now. The only question left is, does your boss?